All right. Today we'll start out with the NASDAQ 100. And today the triple Qs are down 0.7%. And I talked about this last night, how this would be the next obstacle, which was this downtrending resistance trend line where the bears have all of these lower highs to work with. And remember, our job as traders is simply look for the next best trade with the best probability. And I talked about last night how even if we were going higher in the bullish scenario, there was a very good chance we would start to pull back towards this gap fill zone at 510. And as you can tell from this arrow that I drew last night, that is exactly what is playing out. We went a little bit higher, like I said, was likely, and then immediately started to give it all back, and we closed near the low of the day. So tomorrow is Friday, and that will close the weekly candle, and I think there's a good chance we open down here near 510. And then I do not want you getting overly bearish, because around this support zone, once we start filling that gap, there is still the possibility that we get this bullish scenario higher towards 530. And remember, I've been trying to teach you about risk and reward, and the risk reward for that trade is very favorable, which means we could very likely still get a very bullish scenario. Now, nothing is a guarantee with all of these lower highs. There is still the valid bear scenario, so you have to move like water. It doesn't matter which trade you want. If you want to continue to try to short and hope that we go lower, there is plenty of risk reward for that bear trade. But I will caution you that the weekly chart and the longer term trend are still bullish, which will reduce your probabilities as a bear unless we can finally confirm a bear trend. And if we get one more lower low breakdown below the lower high, as you can tell from the arrow, we are easily going to 493, and we could even go down towards 483, which will also be that rising 200 daily moving average. So there is a valid bear scenario. In the short term, I told you that even smart bulls would be selling. And anytime a smart bull is taking profits near a resistance zone, they still become net sellers. So in my opinion, today was the expectation. That's how you saw me draw this arrow last night and then see it play out today. It's not that I'm predicting the future. I'm just experienced and I understand the highest probabilities, and a lot of other good traders are going to be doing the same thing. So in a way, a lot of this just becomes a self-fulfilling prophecy, because the best traders are the traders with the most money. And when they're doing something, it moves the market. It's not the small fish and the tiny little retailers that are moving the market. It's the big fish. And that is why everything you need to know is right here on the chart, because this is the behavior of the large traders that are buying and selling. And just like any market, the big buyers and sellers are the ones that actually drive the movement, not the small little tiny minnows swimming around in their wake. So this was the expectation. From here, you're going to have a very good probability that a bullish trade can play out. And then if we start breaking down, that's going to increase the probabilities we get the bearish scenario. I think if you keep it that simple and you have a trade plan prepared for either of these scenarios, you're going to do very well. And that is why I tell you to move like water, because you never want to get oversold on an idea. When you are trading price action, you need to look at the chart each and every day and continue to move like water. We are absolutely destroying this market by simply just staying flexible, moving like water with the best risk reward setups and the highest probability chance. And we are going to continue to crush this market all year long. Like I told you yesterday, we are still hitting brand new all-time highs in TSC trade alerts, even though the market is not even close to a brand new all-time high. That is the benefit of being a trader. And that is why you can be profitable as a trader no matter what the market is doing, whether it's going higher or lower. We couldn't care less. We simply just want to get in the next best trade setup and make the most amount of money. So watch these critical levels, understand both of these scenarios, and understand the odds still do favor the bull market. On SPY, we had the same exact story as the triple Q, so I'm not going to repeat it all. The critical levels here are 593 for resistance and then 598, with the gap fill and support zones still down there at 584. From 584, you have a very valid bull scenario and a very valid bear scenario, with the highest probability chance that the bulls win, which is going to be at that critical support right around 584. If the bears get a lower high rejection and break 584, then you can start getting a lot more risk off and possibly prepare for a more bearish outcome. So move like water. You have all of the critical levels. And if you want to know exactly what I am trading with the exact percent allocations I'm doing for the T triple Q or the S triple Q, that is my TSC trade alerts, which you can find out how to join in the description of this video as well as the comment section. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.